Welcome to Think Wealth. My name is Anne, and today I am going to talk about investing for beginners. Investing is a great way to build wealth and save for various future financial goals. The idea of investing can be intimidating if you're just starting. The biggest misconception about investing is that it's reserved for the rich. That might have been true in the past, but that barrier to entry is gone today. With so many investments now available, there's no excuse to skip out. Here are some top investment ideas if you're just starting. One is high yield saving accounts. These accounts are often opened through an online bank and tend to pay higher interest on average than standard savings accounts, while still giving customers regular access to their money. It can be one of the simplest ways to boost the return on your money, and you can potentially earn more than your regular checking account. It's essential to compare the rates offered by different banks before opening an account. High yield savings accounts are an excellent place to keep short term savings or an emergency fund because they keep your money in a separate location and typically offer better interest rates than typical checking accounts. Second is 401k or other employer retirement plan. This is one of the simplest ways to get started in investing and comes with some major incentives that could benefit you now and in the future. Most companies offer to match a portion of what you agree to save for retirement. That match is free money and a guaranteed return on your investment. These workplace retirement plans are a great savings tools because they are automatic once you've made your initial selections and allow you to consistently invest over time. When you decide to contribute to a 401k, the money will go directly from a regular paycheck into the account without ever getting to your bank. Most savings are made pre-tax, and some will place your funds by default in a target date fund. To sign up for a 401k or an employer retirement plan, you can talk to or contact your HR department. The third one is mutual funds. Mutual funds allow investors to invest in a basket of stocks or bonds or other assets that they may not be able to easily build on their own. Investors buy a share in the fund, and in doing so, they invest in all of their fund's holdings with one transaction. Mutual funds build portfolios of underlying investments by pooling your money with that of other investors. Their most popular mutual funds track indexes such as the S&P 500. A market index is a selection of investments that represent a portion of the market. Index funds usually come with a lower expense ratio for the fund's investors and occasionally no fee at all. These low costs help investors keep more of the fund's returns for themselves and be a great way to build wealth over time. The fourth one is EFTs. Exchange traded funds are similar to mutual funds in that they hold a basket of securities, but they trade throughout the day in the same way as stock would, and investors buy them for a share price. Compared to mutual funds, which you can only trade once per day when the market closes, EFTs are traded on an exchange. EFTs typically track a particular market index, sector, or commodity and take a passive approach to invest. EFTs do not come with the same minimum investment requirements as mutual funds. They can be purchased for the cost of one share plus any fees or commissions associated with the purchase. Because of their tax efficiency, EFTs are also a great choice for taxable brokerage accounts. The last one is individual stocks. Investing in stocks is an investment you make by buying shares of ownership in a public company. Buying stocks can be the most rewarding investment option. Stocks are priced every second of the trading day. By investing in stock, you're making a bet that the company grows and performs well over time, and your fortune will rise with that of the underlying company. You can invest in companies known for financial stability that deliver consistent performance, returns, and dividends over time. Or you can go for companies focused on growing rapidly. One of the best ways for those who want to grow their wealth with minimal risk is by investing in stocks of established companies. The stock market is a good investment for long-term investors. Investing is a crucial element of personal finance. It is for the long term, ideally for 5 years or more. And it is important to understand the fundamentals of investing so that you can maximize your profits while minimizing risk. Start as early as you can so your money will have more time to grow. Thank you for watching this video. I hope it helps you to get an understanding of investing. If you want to learn more about investing, personal finance, or ways to make more money, please subscribe to the channel. Also like and share if you enjoyed this video.